Good morning. Good morning, Croydon. Good morning, South London. Good morning, the world. Welcome to the second Croydon Business webinar. We're delighted to be back with you again this morning, and thank you very much for joining me. That's my phone, which I'm now turning off. That just proves it's live, doesn't it? So if all our panelists could turn their phones off, that would be much appreciated. So today we're going to be talking about the very important subject of business finance. And we've got a stellar panel here to answer all your questions. I'm going to introduce them now to you. Firstly, someone who many of you will know, Debbie O'Connell, who is a senior relationship manager at NatWest in Croydon. So welcome to Debbie. Jackie Wilding, another really well-known face from accountancy firm Bryden Johnson. Welcome to Jackie. To Rob Cundy, perhaps someone that many of you don't know, but you're going to hear from him today. Rob is here representing his company Edge Recovery. And finally, Puneet Raj Bhatia, who is from Funding London. Now, Funding London have a number of roles here. First of all, they do administer the London LEAP, so the Mayor of London's LEP, the Growth Hub's Access to Finance programme, and he's also involved in the Mayor's existing equity and debt finance schemes. So he'll be able to bring a bit more of a London-wide perspective to this discussion this morning. As last week, I am joined here today by my co-director, Joe Gum, who is actually going to be chairing this session. I'd just like to say, as a small business, this is a subject that is really close to our hearts. And I know Joe has done a sterling job in the last few weeks navigating our way through this. It isn't easy. And on top of trying to keep your business going and handling all the staff issues, trying to work out how to keep the company financially afloat is a major task. And I know, and a huge thanks from me personally to Joe for the work that she's done over the last couple of weeks. She is perfectly placed to lead this session, having experienced it firsthand. So Joe, over to you this morning.
Well, thank you very much, Catherine. It's extremely timely we're having this, because I did hear, as I woke up this morning, the first thing on the Today programme was a survey that around 1 million small businesses are expected to go under in the next 5 weeks, as they are unlikely to have the cash flow to keep going, despite the offers that are coming through from the government on its various business support programmes. We're going to start off today with me looking at each of our panellists in turn and just asking them to let me know what the impact has been on them and what are the majority of the concerns that they are currently hearing from businesses. While we do that, I'd be very grateful if you could start as our attendees, because I can see there are nearly 40 of you at the moment online. Start filing your questions for our panellists. There are 2 ways you can do this. You can type them into our Q&A section and I can then put them to the panellists and we can all respond in turn. Or if you want to wave a virtual hand, I will see you in the corner of my screen and I can let you speak directly to the panellists. So kicking off now, can I start with Jackie? Jackie, what's the biggest concern that people have come to you with over the past few weeks?
For the last 2 weeks, it's really about managing the staff and working out how furlough works. How do they make the choice of who to furlough? When are they going to get the money? How are they going to finance the salaries before they actually get the grants? Everyone thinks the portal is up and running and it's still being made at the moment. So I think people are just really worried about how they're going to fund their payroll and survive. And then they're having the other issue of then trying to actually get their overdrafts increased and get holiday payments for their loans. And they're having to supply an awful lot of information to do that. So we're having to handhold them through that process because they're being asked to do 6-month cash flows, up-to-date management accounts, financial, personal asset statements. And this, for some clients in the SME world, this is very daunting and a very new thing for them. And my fear is that we're just not going to be able to get the money quick enough for them to actually get through the other end. So there's a lot of scared people out there, and we're trying to give them support and help and guidance and just help them make the right decision so they make the right decision to survive after this ends. And we don't know when that end is.
Thanks, Jackie. Maybe this is a good point for me to hand over to Debbie, actually, because I think she can follow on quite nicely from that.
Thanks, Joe. Yeah, so the main thing that we've been seeing over the last couple of weeks is just a rush for information. You know, the phone and the emails have been coming in sort of minute by minute of people just wanting information on the new CBILS government loan scheme, the staff furloughing scheme, as Jackie said, what they can do to cut costs in their business, so to make it more viable. So we've just really, in the last couple of weeks, has been dealing with the rush to get people out information that they can use to make their cash flows or to help them understand the various schemes available. In terms of applying for capital holidays on your loans, I mean, there's two different ways we're looking at this, in that if people have already got loans and they're considered a viable business and there was no problems before, we are just sanctioning 3, 6 or 12-month capital repayment holidays without the need for a plethora of information. So we've done that, and at the moment we've not had, or I personally have not had anything declined, because we want to support our businesses. If you're talking about the CBILS loans, then that we do need sort of more information, which I can cover kind of later on. But I think definitely the impact of the last few weeks is just a rush for information.
Thanks very much. What I'm going to do now is go over to Rob, because I think that you kind of naturally again follow on from those challenges.
Thank you. Yes, the main problem we're getting is people asking about survival. It's all about survival. Have they actually got the cash? Have they got the funds? Can they get the money? What happens if they don't pay? And what's the consequences to the directors if their company does go down, either now or as a consequence of the next month, 2 months, 5 months, year, however long it takes for them to actually get out of this. And I don't mean the restrictions lifting, I just mean getting business back to where it is, normality. So people are concerned about their personal impact to them as a director, and also how they can actually survive, what mechanisms are available to enable them to do that.
Thank you. Annie, can I come over to you? You've obviously seen quite a lot of impact in London, which has been the hardest hit. How's the Leap coping with what is presumably a lot of demands for support?
I can't speak on behalf of the Leap, but I can certainly tell you what the proposals that we are putting forward to the Leap to try and help the businesses that we deal with. Just to sort of set the scene here, the context, the businesses in our portfolios, in the various funds that we invest on behalf of the Leap are usually early stage young entrepreneurial businesses at various stages of their lives. A lot of them are very early, pre-revenue. Some of them are getting to a point where they are about to get good market traction, and then there are a number of businesses which are much further advanced, and they have substantial revenues. But given what's going on in the markets right now, there have been impact across all of those stages of businesses. Their revenues, the ones that did have good substantial revenues, have just all of a sudden lost them overnight, and the ones that are dependent on investments to get to the products or the solutions that would eventually be taken up by the market, they have had issues raising the financing from debt and equity providers. Even where the financing was agreed, that has been delayed, and in some cases indefinitely. Nobody knows when that might be forthcoming. So our immediate ask is to try and get some sort of sources of funding available to help these businesses, and this source of funding needs to be aligned with the founders and the entrepreneurs, not necessarily as an external organization, but as an investor in those businesses, to give them another 3 months, 6 months to cover the uncertainty. Hopefully we remain optimistic that during this time we might be able to get to the other side, but we certainly need financing now to cover their cash burn for that period of time.
Thank you very much. I'm getting quite a few questions in. The majority of the early questions that we're getting in are about the access to the coronavirus job retention scheme, which I think we've taught us all the new word of furloughing. And a lot of it is about how to access it and the timing of when the grants will come. Jackie, can I hand over to you for that? Because I think you're probably best positioned, given that a lot of the guidance only came out last Friday.
Yes, so we have two steps we need to do. First of all, everyone needs to make the decision who they're going to furlough, and I would suggest they do that as soon as possible, because this is about protecting your business. Make sure you get HR advice and send out the appropriate letters. Then your payroll provider will run the payroll, because this new portal will then link to the RTI records. So you need to make sure you've run your payroll with your 80% salary on there, and then everything gets calculated as normal. The portal hasn't been fully completed yet, and reading everything, it doesn't look like it's going to be ready till the end of April. And then each employer then has to go on the portal and enter all their information: who's been furloughed, what date were they furloughed, put their bank details and sort code. I'm telling all my clients that they won't see any money till mid to the end of May. And some people are saying later than that. So I think we've all got to work on the basis that you won't get the grant money until the end of May.
Thank you very much, Jackie. I think that probably, thank you very much, Jackie. That probably leads us on to Debbie, because I'm aware that cash flow has become a significant issue, even for businesses in the extremely short term until some of the grants come through. A lot of the banks withdrew overdraft facilities and everything a few weeks ago. So what is it that the banks can do to even help companies get over the short-term challenges before we even go on to the longer-term challenges?
We've been looking at with our customers that have come to us. Originally, when the job retention scheme was launched, we didn't think that there would be that much of a problem, because we thought it would be a little bit more instantaneous. But we too have been thinking that we don't think people are going to get their money till the end of May and June. And obviously they've got to pay these salaries before the money comes through. So what we're looking at, and apparently there's going to be something announced today, is some form of a quicker way to access an overdraft specifically for paying salaries, which will hopefully help. But we're expecting details of that today, so I don't have them at the moment, but I'm happy to obviously circulate them afterwards. But what we are doing is customers that have got existing overdrafts, we can look to extend those. And if it can be shown that it's to pay the staff salaries and that you have furloughed those and you're going to be getting it back, then, you know, we're happy to look at that without too much information, you know, just to do that. I
was going to ask, what's the procedure for that? What should somebody do if they want to look at that?
Well, they need to speak to obviously their bank manager, and we will ask for, you know, probably details of because I think, if I'm correct, I think it's taken from the February payroll. So we'll be able to see then if you should provide the February payroll details of what staff you're furloughing and what you're going to get back for that 80%. So we should be able to help with that. I mean, in the longer term, the CBILS loans can also be used for payment of staff salaries, but obviously there is more information needed to apply for one of those, which, you know, I can go through later on if needed. But, you know, we are really up for helping to pay salaries, because staff are one of the most important things to any business, and most businesses want to help them and want to try and retain them so that when this is over, they've got a team ready to go again. So, you know, that is one of the things that we're most keen to, you know, help support.
Thanks very much, Debbie. I think we're going to come on to CBILS later. I've got a question in that's related to furloughing, which I'm going to throw back to Jackie, which is the 80% or 2,500 paid to employees each month on the furlough scheme subject to tax, pensions and NI, etc.? I remember where there was a long debate last week whether that grant was wage costs or salary, and I'm feeling that that it only came out last week, that guidance.
Yeah, luckily the guidance has come out, and yes, it was misinterpreted, but the good news is, so for the employee, it's £2,500 gross, then you get tax and national insurance deducted and your pension, your auto-enrolment pension deducted. And then for the employer, we get the £2,500 back, plus our minimum pension contribution of 3%, plus our employer's national insurance.
Thanks very much. I've got one other quick question on furloughing before we go, which is what should the position of the employer be if staff request to volunteer and continue some capacity of working during furlough?
They cannot even read business emails or communicate by business emails. They cannot have any business interaction at all, I'm afraid.
Can they have a social interaction?
Pardon?
Can they have a social interaction?
Yes. Just not this one.
I know that we've decided as a business that we will allow people to socially interact because staff's mental health was important apart from anything else.
No, you can 100% socially interact. You just cannot do any work. You can't even read or answer an email. You have to put your out of office on and say that you have been furloughed and your emails are being read by somebody else. And if you've got a query, you contact and you put a name there. But you cannot do any work. This will be audited, I'm afraid, one day by the HMRC to make sure no one's abused this system.
And a final question, which is also coming in, Jackie, which is about, we understand that people can't work for their company if they're paying up to 80% of their salaries, but can they top that up by doing work somewhere else, for example, as a key worker or volunteering somewhere?
Yeah, so you can certainly volunteer. You can also be a key worker and you can also apply to be a delivery driver, as there's loads of delivery jobs out there, but you can only make up the 20% that you're not getting paid by your existing employer. You cannot earn more than what you would have earned if you've been working full time for your existing employer, and you have to ask their permission and just let them know you're working for someone else. But you cannot financially benefit from this. You cannot earn more than you would have done if you've been an employee.
Thanks very much, Jackie. I think a lot of the next questions we're getting in do relate very much to the business interruption loan and other financial support. So Debbie, can I go back to you and say a little bit about that, and then I might go on and have a chat with Rob, because I'm aware that whether or not there's a personal guarantee on it has been a very contentious issue among small businesses.
Yeah, so the business interruption scheme is a loan launched by the government, and it has in effect replaced the old EFG, the Enterprise Finance Guarantee Scheme. So that's what it's replaced. It's not a grant, it is a loan, and the borrower is 100% liable for the loan, even though the government backs it by 80% to the bank. So if you do take out the loan, you are 100% liable for it. There's quite strict restrictions around the loan. So the term of the loan can't be any longer than 6 years, but there's a mandatory 12-month capital and interest holiday on that. So you don't pay anything for the first 12 months of the loan, which means that whatever you borrow, you have to be able to service in the remaining 5 years. And I think that's where we're coming up against a lot of barriers, in that people are asking for an amount of money that the business can't afford to service over that 5-year period. There's no fees for the loan. That's all fee free. And then it's kind of split into two sections. So you can borrow up to 250,000 and the bank won't be asking for any kind of security. But if you borrow above 250,000, then we will look at what security the company has available. And that's really important to stress company. We won't, and I'm speaking obviously from NatWest here, because I know there's been in the press quite a lot of differences about different banks. But we personally won't be looking, or the bank won't be looking for any personal security or any personal guarantees. And if you've got a personal guarantee for existing borrowing with the bank, that won't be linked to the new CBILS loan that you're applying for. So it's available to businesses that turn over up to 45 million. And there is quite a lot of information that we do need. It's not quite how I think it was advertised, first of all, by the government, that I think people are thinking you can like literally walk into the bank, say you want this much money and it's a done deal. and that isn't the case. There's quite a lot of information that we need to assess whether it's viable. So the kind of things that you're going to need to provide to your bank are obviously what you need the funding for, whether it be staff costs, you know, to keep the business running, payment of debtors, creditors, rents, things like that. We'll need an overview of how the business was doing before the coronavirus, so how your trading was in the last 12 months and how you expect it to continue after the virus. In terms of financial information, we will need the last audited accounts, obviously preferably 19 and 20 if they're available, or if they're not available, some management accounts, which, as Jackie said earlier, that is sometimes a bit of an ask for the smaller businesses because they're not used to producing those, and so they've either got to try and do them themselves or, you know, get their FD or accountant to produce some, and obviously those people are swamped, you know, doing it for everybody, so that can be a challenge. We'll also need to know the kind of measures that you're putting in place to help the business, so as such as furloughing staff, applying for rent and rates reductions, cost saving exercises, so that we can look when you produce the cash flow. So we need a cash flow forecast for probably like the next 12 months, but in that we need to see the measures that you're actually taking yourself to help your business to be able to survive this. So let me have a look at this. I mean, another measure you can take is obviously look to approach if you've got any asset finance, to apply for holidays on those. And again, with bank loans, you know, like I said before, we're giving people 3, 6 and 12-month holidays on their loans. So obviously that will help when you do your cash flow, because you won't have those costs to consider when you're working out how much you actually think you need to keep the business going during this period. What else do we need? Just having a look. So when we look at these requests, we're going to be basing the affordability on your latest accounts. So that's 2019 or 2020 if you have them. Obviously, there will be some caveats to that. I mean, if you had a particularly bad year in 2019 for a reason, but before that the trading was really good, we'll take that into consideration. And what we're looking for as well is that we're basing the future affordability on your 2019 figures. So what we're expecting to happen is for the next 6 months, it's just going to be in a lockdown situation, you know, and businesses are going to be struggling. 6 to 12 months, you know, we're expecting some kind of recovery to be built into the cash flow. And then after 12 months, we're thinking that things will probably go back to the 2019 figures. But also there's a caveat in that, you know, if you've won a contract that's going to increase your turnover and your profits, then it's going to be, you know, your 2021, 22 figures may be better, and we'll take that into consideration as well.
Thanks very much. Going over to Catherine, who wants to ask a question.
I just wanted to say that, you know, that all sounds very complicated. If you were a small business without someone like Joe, as I've got, who is able to work their way through that, and many small businesses are, you know, employing 1, 2, 3, 4 people, or even sort of sole traders, what support can they get to help them to do all that work? Because when you're trying to run a business and do all of that, you know, what can the bank do? Or I don't know, Rob, whether there's any support that a company like yours can give. I mean, what support is there out there to help a small business do that? Or Jackie, I'm sure.
Rob first.
I think the important thing here is actually, this is where your accountant comes into play. Jackie, being the accountant, is actually they're the people you need to be speaking to, because they're the ones who know the numbers. They know what the bank needs. They know how it can be delivered. From our side, you know, as insolvency practitioners, everything that Debbie's actually said is effectively what we would look at after the event. What Debbie is actually asking for to get this shows good stewardship. Even if it doesn't go right, if you can actually show that you thought it was going right, you had an opportunity, you had the possibilities to actually get out of this, you had a robust cash flow, you had all the possibilities, then after the event, if anything bad does actually happen, we would take a much more lenient view towards this, and so would government, and so would anybody looking at your stewardship of your company or your business. So a lot of this is actually very good management of your company, and probably a good idea to get into a good habit to do, not just now but in the future. Yeah. But it is Jackie who needs to be spoken to, because the accountant is a valuable tool right now in terms of cash flow management, getting your forecast together, working out what you're going to do, what is affordable. Remember, these loans must be repaid. They have to be repaid at some point. So look into the future, get a good idea, work on the basis that you can recover in 6 months, 9 months, 12 months, and actually see what you need now, rather than actually do a knee-jerk reaction to get immediate money that will last you 1 month, and then probably go back on bended knee to the bank and say, well, actually, I'm afraid I need at least another 2 months, 3 months, 4 months worth. Have an open dialogue now. That's what I would say.
Jackie, would you like to add anything?
I was just going to say that is brilliant advice, and the only thing I would add to that is not only is it a good opportunity for you to be looking at how digitally effective you are with your accounting, and that you can work remotely. I think technology has got to be at the top of everyone's agenda, but also look at how you run your business now, and think about how you're going to restructure it and what it's going to look like when you come out the other end, because your business may look very different, and we're all going to get used to working from home, and we're all going to be more mobile and flexible. But I think you also need to look at the way you run your business and all your processes, and how digitally advanced you are, and get your management accounts done. And I think this is a good lesson for all businesses going forward. We'll be stronger when we come out of this if we follow that advice from Rob.
Thanks, Jackie. I'm going to go back to Rob, because I think I'm aware that Debbie touched on the issue about personal guarantee for the loans. And I understand that she and some of the other banks are now lifting that requirement for loans that are below a certain value. What is the result of having a personal guarantee against something, which I think a lot of people aren't clear about when they take a loan out for their company?
Right. Well, it's very encouraging to hear Debbie say that the bank is not looking at personal guarantees or personal security, because I think that's an important thing for anybody approaching any bank. You need to understand exactly what you are signing up to. If your company cannot afford to pay this loan back, and you have given a personal guarantee, then in the event that your company does fail or otherwise, the liability falls on you immediately as a personal guarantor. The consequences of that are that you must repay it yourself, and your personal assets are at risk. Now, I don't know what the current position is. I read a little while back that these loans have stipulated that they shouldn't be seeking personal guarantees against personal residential properties, but that leaves all of your other assets at exposure for any personal guarantees that you've given. Now, this doesn't just apply to this new loan. I think you ought to be considering also any guarantees given in the past for your landlord, or for your leasing equipment or other supplies where you might have given personal guarantees. Your business needs to, obviously you are looking at survival now, but it will come back and hit you if that doesn't go well, I'm afraid.
Thanks very much. I'm just going to launch a quick poll now. We've been running a weekly survey about business confidence under the current outbreak. So I'm just going to launch a poll now, and I'd be really grateful if the people we've got online could respond to that. I'm also aware that I've got over 50 of you following this, so I would be really grateful also if you can field your questions, or if you'd like to ask them live to the panel, just use that wave functionality and I can bring you into the conversation. While we're doing that, a couple of people have emailed specifically about what help there might be for company directors, who I believe are neither covered by the furlough scheme nor by the self-employment scheme. I think, again, probably I'm going to look at Jackie and Rob as the two most appropriate people for that, but if anyone else would like to wave, please feel free to do so. Jackie?
Okay, there has been some good news about directors, and I need to get the real detail behind this, but my understanding at the moment, I'm pretty confident of this, is that directors can furlough themselves, but they cannot work for the business. All they are allowed to do is meet their statutory responsibilities, which is file their VAT return, file their accounts, complete their compliance statement. So directors can furlough themselves, but my advice to all my clients is you can't furlough the whole board of directors, because someone has still got to be there running the business, liaising with the staff. We're talking to all of our clients, so you can't just completely shut your business down and go, bye, I've been furloughed. So they've just got to be sensible. One of my clients has got 3 directors. One director can now run the business because all their construction sites are now shut. He can make all the decisions and meet and do everything. He doesn't need his other 2 directors. So they will be furloughed. So I think that is very good, welcome news.
Yes, if I just want to add on to that, my understanding is directors can furlough. As Jackie said, you have a practical difficulty in having been furloughed. You're not meant to be doing any work for your company, which makes very difficult that you just close the doors, go away, have a 3-month holiday and sit there and not even know what's going on. But just my understanding, Jackie may be able to confirm this, is that if you are furloughed, you can only claim your PAYE salary amount that you are actually already declared. So if you are on minimal salary and dividends, unfortunately, your 10, 11, 12,000 pound a year salary, which you get, is the only amount that you would be able to claim your 80% on. You cannot claim against the dividends if you actually are drawing your money out in that way.
100% correct, Rob.
A couple of questions are coming in about whether or not you can furlough a team member part-time. I don't believe you can. And whether or not you have to furlough them for the full 3 months, or whether or not you can bring them back. Jackie, are you aware of the rules around bringing people back, assuming business picks up?
Well, you have to furlough for a minimum of 3 weeks. So you can't part furlough. So my clients are not, some of them are not using the furlough provisions. They're just reducing their staff hours and just going, you're now on a 2-day week. That's not obviously furloughing. So you can't part-time furlough, and you have to furlough for a minimum of 3 weeks. My understanding is you can bring them back for a week, but then when you furlough them again, it's got to be for a minimum of 3 weeks. So you've got this 3-week rule, but you can't part-time furlough.
That is also my understanding exactly, that part-time is even on, if you bring somebody on reduced hours, it means that they get paid a reduced salary. They cannot claim anything from the government if they are doing any work for the company.
Correct.
Thank you very much. There's another interesting question come in talking about the business interruption loan. And I'm going to go to you, Debbie, for this one, which is, I think, coming in from Brian Hammond. And I'm just going to say, Brian, would you like to ask this question direct? Hopefully I've managed to let you come in on the conversation. Brian, can you come in or not?
It's it, Joe.
Well,
he needs to unmute himself.
I think you need to unmute yourself, Brian.
How about that?
That's fantastic. Lovely to hear.
Right, it's just a question as to whether or not this CBILS loan, which I understand is interest-free in the first year, whether or not the loan then has a fixed interest rate or a rate that's linked to the Bank of England base rate for the ensuing 5 years, because my bank today has increased our overdraft facility from 5% to 10%. They sent out an email 4 or 5 days ago. I'm a sole proprietor earning over 50,000 a year. So as I understand it, I'm not entitled to anything. We've had to close our health centres down because with 100, 120 people a day meeting in the reception room gives us problems with cross-infection. However, the government have made us exempt from closing down, so we don't get any business rate relief. And at the moment, things are looking pretty grim for sole proprietors who are self-employed with 20 staff. So my question is about the loan. Is that going to be where the bank will decide what the interest rate's going to be, or is the government going to decide?
Okay, that's, you know, obviously sorry to hear, you know, problems you're having. It's not a nice situation to be in, but you know, a lot of people are in it, which is really sad. Yeah. In terms of the interest rate, so the interest rate is set by the bank for the loans. They're interest free for the first 12 months, and then it's linked to base rate. So it will be a percentage above base rate, which is obviously was dropped last week by the Bank of England to 0.1%. So the interest rate will be set above that. And how we look at setting the interest rate is we look at the financial performance of the company, obviously prior to this happening, in terms of your bank accounts and any finance you've got with us already. So that's how we would look at the interest rate. You know, obviously I can only speak from NatWest, but you know, as far as I know, we're not you can't just increase somebody's interest rate on their overdraft, because you should have had it for, say, a committed period of, say, 12 months, and a rate was agreed above base rate at that time. So if you was agreed 2.5%, say, above base rate, that's what it should be for the period of time that you have the overdraft. So I'm not, you know, obviously without knowing the details, but I'm not really sure why people are increasing the overdraft rates.
I'm assuming there must be something in the small print which allows
Maybe
to increase the rate. Normally there's some small print everywhere, which
yeah, but I'm certainly, you know, it's not something that we are doing at all.
Which bank are you with, Brian?
A Santander.
Okay.
I would go back to that. I mean, my advice would be to go back to them and ask why obviously they're increasing it at this time. You know, I would say to them, you know, do you think that's treating the customers fairly? Because that's a very big thing for banks at the moment, to make sure that we do treat customers fairly. Ask why they're doing it, and ask to see, you know, the proof in the agreement that they are actually allowed to do that. So that I would definitely approach them today and ask those questions.
Okay, thanks very much for your advice.
Okay.
Thank you. Question coming here, probably mostly for Rob, actually. Which is, what is the best thing to do right now for businesses? Are they better off considering whether they should just close, given there are changes to the Wrongful Trading Act, rather brutally, and try to re-emerge at a later date?
Okay, thank you. Let's look at the consequences of closure or not closure. If you decide to carry on and you decide to keep trading, you as a director or business owner will be looked at and considered as to whether you have done everything that you should have done as a reasonable person to carry on trading. There was, or well, there currently still is, but the government is changing the law to stop the impact of wrongful trading, which was the weapon, I suppose, that an insolvency practitioner could use to go after a director to make them personally liable should they get the decision wrong, and it being an unreasonable decision that they made. The government has announced that they are removing that weapon so that directors can make difficult decisions in this difficult time without too much fear of becoming personally liable. The question whether you should stop or you should start, or whether you should actually just keep pushing through, largely comes down to your business plan, your forecasts, whether you realistically expect that you have a future in your company. Now, even those people who have got cash flow difficulties, even if those people who are waiting for money to come in, this is going to sound extraordinarily harsh, and unfortunately we are in survival times. You must consider what you do with your cash right now. That might mean that some people, whether they're landlords, whether they are suppliers, or indeed whether they are staff, get paid. If you think you're going to get money in the next 3 months, cash flow to be able to catch up again with the historical items you haven't paid, have it properly documented, properly looked at, and if you can do that, then you can recover from it afterwards, and it's a short cash flow problem for everybody, I'm afraid. But your forecasts are key right now. Your decision, have your business got a future? And what Jackie said earlier about business is changing. This is not, will I come back to exactly the same way that I was before? It's more a question of, what will my business look like, even in a reduced terms, even those who are furloughed and then you do not bring them back in. Anybody, what is your business going to look like? And unfortunately, this is crystal ball time, because none of us know how long we've got, how long it's going to last, what's going to happen. But just have a reasonable expectation, and that is all anybody can ever ask for you.
Thank you very much. Vineet, is there anything that it is possible for some of the existing schemes which the Mayor have or the Growth Hubs have to support businesses at this time? I know we've talked a lot about that sort of immediate requirement for money, but also the requirement for money once all our businesses have changed and adapted, so that we can form part of the recovery, hopefully later this year.
Indeed. So there are a couple of funds that were launched last year, and those funds are still investing. They were launched under the umbrella of Greater London Investment Funds, GLIF, as they're called, and there are two strands to those funds. There is a £50 million fund which invests, which takes equity positions in businesses. That's Ventures, and they are investing. Usually they look at high growth businesses, and the businesses obviously have to be based in London, because this is all money is channeled through the London Mayor's office, and there are some European sources as well. And then alongside that, there is a debt fund as well, which is managed by Finance Southeast, FSE. There are two elements to that fund. There is a small loan funds going up to 250,000, and then larger loans beyond that. Usually these loans are longer term, and they are much more flexible than sort of working capital financing from the banks. They are structured on a bespoke basis for individual businesses, in terms of the repayment profiles, in terms of the interest rates that are put on those loans. So it's I would encourage people to certainly look at these two schemes to see if people qualify. But I have to say that these are commercial investment funds. These are not grant funding. So the expectation for the fund managers would be to invest them on a sort of commercial basis. We are in conversations with the fund managers to see if some of the investment criteria for these two funds can be changed or tweaked given the current environment that we are in. And hopefully, any changes that are made hopefully will come online in the next week or so. But the funds are available and they are considering investment. So, Google Greater London Investment Funds, and you would be directed to either MMC Ventures or Finance Southeast if you're looking for the loan side of things.
Thank you very much. Catherine, you wanted to come in on this one?
So I just wanted to say that obviously the word you've used there twice is usually. These funds are usually. And I do know that obviously nothing is usual anymore. And I know that, that the Mayor and the LEAP board are currently reviewing the usual thing and looking at how all of that can be repurposed to help in the current crisis. I also want to just remind everybody that there is a website for the South London Growth Hub, or for the Growth Hub generally across London, which is Growth Hub London. If you Google Growth Hub London, what that will give you is access to a free advisory service. There are currently 6 advisors that operate across London, and your best route to understand more about what Puneet is saying is to go onto that website, book a call. They're doing 1-hour calls with businesses that need one-to-one advice. It's a free service, and I know not everybody knows that it's out there. So the reason we did ask the South London Growth Hub advisor, Sharif, to be here this morning, and the reason he can't be here is he's busy taking those calls. So please do go to Growth Hub London and book one of those calls, because that can help you with guidance towards some of this funding.
Thanks very much. I've got a couple of very specific furlough questions in, so I'm going to throw those open to Jackie. One of which is, when does the furlough period have to commence? And the other is about, how do you calculate the salary if someone's been on a variable pay? So when does it start?
Okay.
How do you do variable pay?
Okay, so you can only furlough people that were on your payroll on the 28th of February. So unfortunately, I've had some clients who recruited staff in March. You can't furlough anyone that you recruited in March. So it's only employees that were on your payroll in February. When you calculate the 80% salary, which remember is a cap of £2,500 a month, you don't include commission, you don't include bonuses. So it is your standard pay. If you're on variable pay, I would just average it out over the last 12 months. So just take an average, but you don't include any bonuses, no commission. But I guess in some construction industries, their weekly pay does vary. So just take an average. Does that help?
Yes, thank you very much. I hope that helps. I also have a question about redundancy. Some people seem to be quite confused as to whether or not, after the furlough period, if staff are unable to return to the business because there hasn't been an upturn, are you still liable for redundancy payments? Rob, you're nodding away there.
Do you want me to take this one?
Yeah, go on.
The answer is simply yes, you are still liable for redundancy. Furlough does not change employment contracts. It does not change anything about this. And in fact, one of the things about furloughing that you have to do is you actually have to invite the furloughing to the staff member, and they have to accept it, because it's not actually in part of your contract. It's very unusual if it is. So just make sure, as Jackie said, make sure you get the procedure right. But if you decide to actually not bring somebody back, you do have to make them redundant. There is assistance from the government in respect of redundancy pay, but that is I suppose, call it a loan. The government can actually fork out if you are cash flow difficulty, but they will then recoup it from you. You are still liable. I think the question then went on to the concept of unfair dismissal. Yes, you still have to follow exactly the same rules and regulations as if you were making a redundancy outside of furlough or outside of any of these circumstances. You cannot just pick and choose the ones that you don't want. They have to be a good business reason. And again, proper consultations if you have that many staff, follow the rules. This is not changing anything about those laws.
Thank you very much for that. I think it was good to have clarity around that. Because there's a lot of discussion about whether or not rules are temporarily changing. I think a temporary suspension is the best that many of us can hope for while we get ourselves back on track. Another question that's come in, and I think it probably is for Rob as well, just while we're going forward this, which is a lot of us probably not being paid by some of our debtors. In the current climate, where there has been some guidance that not everybody has to pay all their bills all the time, what is it that businesses can do about this? Because clearly a lot of our cash flow is dependent on those people who owe us money actually paying it to us. Would anyone like to wave as an answer for that one?
I can help if you wish. This is a difficult one because it works on both sides. There's one thing that you want to be paid your debtors so that you have your own cash flow. Similarly, all of your suppliers want to be paid by you so that they have their cash flow. It all works around. And if you are not being paid by your debtors, the rules and remedies still exist, but practically you might actually have difficulty. So the government, for example, if you wanted to actually pursue them into a form of insolvency, the government indicated that they were going to relax the rules or put a prohibition on petitioning. I haven't actually seen that has formally hit anywhere yet, but we do know that last week, for the first sitting of the courts where petitions were due to be heard, the judge sat down for about 5 minutes and adjourned every single petition for 12 weeks, minimal. So although there might be the courts might be open to do it, the judges seem to be reluctant to actually sit there and go through an entire hearing of 50 people in the court. So practically speaking, you might not be able to get down that road. Otherwise, you know, if you really are desperate and you want to carry on going down the standard routes of high court enforcement or going through the other elements of you know, the collection methods, then yes, carry on. But I think you should probably appreciate that as much as you can't afford to pay your suppliers, your debtors probably can't afford to pay you right now on their cash flow. It's a matter of sitting back and waiting to a large degree.
Thank you very much. We're down to the last few minutes, so I'm hoping that I'll get some more questions out there from people waving at me or going online. There's a debate going on our question and answer feed about small businesses who get small business rates. We don't have anyone from the local authority here today to be able to answer that question, so we will be fielding that one out afterwards to the relevant people. In the meantime, can I just go around our panel and say, is there anything else that they would like to add or specific advice that is the top tip they would like to give to all our 50 plus listeners that we have here at the moment? Where would we like to start? Puneet, could you start for us, please? What's the most important thing you think that our businesses to focus on in the coming week or 2 weeks?
Conversations I have been having with the businesses in our investment portfolio have been along the lines of, you know, you need to get into survival mode now. Here's this current environment requires you to look at your business again and see which costs are absolutely necessary and where you can cut them. Try and get as much runway as possible. Specifically in our sector, in the sort of high growth technology businesses, we are asking them to close funding rounds as quickly as possible rather than negotiate for longer periods of time to get the highest valuations as possible. So that's important, to try and get as much cash into the business and conserve as much cash as possible, and ride through this time currently.
Thank you very much. Debbie, what's your best advice right now for us to focus our minds in the coming weeks?
Right. Well, what I would advise is to speak to your bank, you know, phone them up and have a conversation with your bank manager and ask for help and support. Because, I mean, just me personally, all of my sort of 100 clients, I've been sending them out, you know, regular updates and helpful tips and advice and things how to apply for these loans. But if you actually speak to them, you know, it's not, everybody's focusing on the CBILS loan, but that's not the only thing available. I mean, we've got lots of other things that we can help you with, lots of other finance products, and also ways, you know, to help save the business money. So, you know, I think the key thing is to actually have a proper conversation with your bank manager, because, you know, we are trying to help and be supportive. And then I think the next thing is to actually, and this is what Rob said as well, is to actually spend time looking at your business and looking as to whether it is viable, you know, what your plans are for the future and whether you want to sort of see this through. And, you know, spend time on the cash flow, looking at every saving that you can make so you can really come out with a figure that you need, because it's no good, you know, rushing it and then coming out with, oh, I think I need this, and then having to come back in 2 or 3 months' time and saying, well, no, actually, I need, you know, need more. So spend a significant amount of time now looking at what you need. And when you're looking at that, focus on, you know, that it does have to be repaid, you know, to make sure that the debt is serviceable and that the business is viable. But my top thing is to speak to your bank manager. And, you know, if anybody wants any general advice, whether you're with NatWest or not, you know, I'm happy to have a general conversation and help anybody out with any questions kind of after this.
Thanks very much, Debbie. Rob, what about you? What's the top tip you need us to focus on?
I kind of reiterate the comments from Puneet and Debbie there. Consider what is essential. Consider what you actually must do. You are in survival mode here from a business perspective. Planning, communication with your suppliers, communication with your landlords. Do everything you can to minimize your current exposure so that you do not run out of money. Getting through the next 3 months is going to be difficult enough. Getting to get back on your feet after the next 3 months is going to be a major struggle if you do not have cash at that point in time to be able to invest in your business, to be able to pay for things, to get suppliers back on board, to do all the other things. So consider now it's essential payments only, proper planning and communication. Like Debbie, if anybody's got any questions or they want to ask me, I'm quite happy to actually answer them, you know, free of charge, to help anybody who is facing those difficult decisions right now.
Thanks very much. Jackie?
I echo everything everyone said, and I think to state the obvious, as a business owner, what are we? We're always time poor, aren't we? We now have time on our hands to actually sit back and think about our business strategy, think about how we run the business, and look at all our overheads. And I think we all get very complacent, and I'm sure people will find things they didn't even realise they were paying for, and they're now going to sit back and go, why am I paying that? What value am I getting for it? But the key for me is get advice, whether it's insolvency advice from Rob, you must talk to your bank manager, you must talk to your accountant, because, you know, at the end of this, people are going to thank everyone for all the help and advice and support they gave. And, you know, getting your white label emails every evening that I can read to hear about what's happened has been absolutely really, really helpful. And I've shared them with clients. So now is the time to actually help and advise everybody. And we're all here to help everybody because we're all in the same boat. We've all got to survive, and we all don't know what the future holds for us. So we've all got to help each other.
Thank you very much. And thank you all to our panellists for offering to provide that extra bit of advice going on after this panel. So if our attendees would like to continue to send in questions in any way they feel like doing so, we will ensure they get them answered. I have to apologise, there's a slight issue with our polling questions today, so they will be coming out with you as well after this meeting. And now I'm going to pass back to Catherine to finish us off, as we are about to run out of time, I'm afraid.
Thank you, Jo. Thank you to all of our panellists. Thank you to everybody that has logged on this morning. Hopefully you found that useful. Just to say that we will be issuing this as a video, which you'll be able to view on YouTube and on our website, and I'm sure on our panellists' websites as well. So do refer back to this, and we will obviously share details of our panelists so that any of you that want to take them up on their offer of some extra support, I'm sure that would be gratefully received. I just want to announce that next week our subject for our Croydon Business webinar at 10 on a Wednesday is going to be commercial space and the security advice for businesses at this time. So actually not just commercial space, but generally office space, retail space, industrial space. How as businesses, when we've all been asked to work remotely, can we ensure that our premises are kept safe and secure? We'll have another expert panel on board, including representatives from the Met Police and from other cybersecurity experts. It is a big subject. We can't just shut our doors and forget about it, unfortunately. We have to make sure that that side of our business is there for us when we return, in however long that might be. So from all of us here, thank you very much for joining us this morning. Hopefully you found that beneficial, and we look forward to seeing you next Wednesday at 10. Thank you very much.
Thank you and goodbye.
Bye.
Bye-bye.
Thank you all. Bye-bye.
Thank you. Thank you.
Stay well.
Thanks.